Hi guys, this is Ray again, and in this video we will be going over the visible accumulation characteristic of the highest volume since IPO day. This characteristic is a little bit different than the one we covered in the previous video, which was a big volume gap up with a minimum requirement of the volume being the highest in over a year. This particular characteristic, which is the highest volume since IPO, signifies the fact that there's new interest in the name since its IPO day. Our first example that we have up on the screen is Pins. The fact that Pins has seen a gap up in volume here, and it was the highest volume since its IPO day, but a poor closing range would not qualify as a visible accumulation characteristic at this point. That's why we've marked it up with an X here. The second spot that we see a gap up in price, but the closing range was poor, was over here in Feb 2020. We were in the midst of a correction about to start, and the price of the stock falls right from $27 to $10. So there are three things that are fairly important for this highest volume since IPO day characteristic. The first one is the fact that the closing range must be strong on its gap up. It failed its closing range at this point, which was less than 50%. This was a close at the lows of the day. This was a gap down with a large volume, which is also no good since there's no price increase at this point. The second thing is you want the markets to be behind you. You want that wind behind your back. If the market lines up with a stock gapping up with the highest volume since its IPO day and a high closing range in an uptrending market, that's sort of the recipe for success on this visible accumulation characteristic. Again, like we've said in the previous videos, the fact that we get this does not automatically mean you should be buying stock in the middle of nowhere on the chart. You still have to define risk on the chart, position in the chart with optimal, within a optimal risk parameters within your risk appetite, and define risk as the stock consolidates before its run up in price in this area. So that's the first example, Pins. We will go to another example. This is Fastly, FSLY, and in this chart, this is the IPO day. It has a good closing range on its IPO day. The stock consolidates, and we see the highest volume since IPO at this point, but that was without an earnings catalyst. We see a similar candle at this point, which was the highest volume since its IPO day once again, but that was without an earnings catalyst. And at this point, in a uptrending market, once again, we saw a gap up in price on Fastly, with a earnings catalyst and a closing range of 87%, and the markets were in a general confirmed uptrend. At that point, the stock meets the three things that we're looking for, which is a high closing range, the general market's in an uptrend, and an earnings catalyst on its gap up in price to potentially position in the name if it allows or presents that optimal, risk for you to position in it. Again, this is not an automatic buy point. It has to fit within the confines of your system. This is a characteristic a Fastly would make our personal watch list, where we would start tracking it for entry. Within this particular chart, this is a fairly advanced entry on the second day of its earnings. The real consolidation comes in right below its $50 mark and then it breaks out once again from 50 to 90. So it's important to not take this as a buy signal, but to wait for the stock to consolidate, give you a proper entry area for you to position in it after the characteristic is seen. Third example that we have up here is FSLR. This is First Solar back in 2006, 2007. It IPOs, stock consolidates, and then we see a gap up in price with a earnings catalyst. The volume was the highest volume since its IPO day volume, the closing range on that day was 77%, and the markets were in a general confirmed uptrend. At that point, FSLR would make your watch list. You can stock the chart for an entry, look for your risk parameters, define your risk properly, and then potentially position in this sort of move where it was a fairly cooperative market from 2007 to about the end of 2007, where the stock trended from its 40s all the way to 283s. Our last example in this video for the highest volume since IPO is going to be Facebook. Facebook IPOs, and we see several gap ups. So this was the highest volume since IPO day, which we've marked up on the chart, but the closing range was less than 50%. Those are more failure prone. That's why we have this closing range as a requirement for it to qualify as a visible accumulation highest volume since IPO day characteristic. The second one we see the highest volume since its IPO once again, but with no earnings catalyst at that point. The stock was pretty much coming straight off the bottom. We still have to wait for some sort of consolidation to follow suit if we want to position after such a candle, but again, that does not qualify as one of the requirements for this characteristic. Finally, in August, we see a large price gap up in Facebook from the $26 mark to about the $32 mark. And at that point, it met all the characteristics. The market was in a confirmed uptrend. Price gaps up, highest volume since IPO day with the earnings catalyst. If we draw a line across this volume, this is the highest volume since its IPO. We got a good closing range of greater than 50% on that gap up with the earnings catalyst, and the market is also in a confirmed uptrend. So we will wrap up this video on that. Again, the context of the markets is very important. The closing range is important, and we need the stock to provide us a good entry with good risk reward. Those things remain in place, and this is not a automatic buy signal just because it meets the three criteria. We still, risk management comes first. This is just a visible accumulation characteristic that you may spot on the charts and make watch lists of such stocks that are exhibiting this characteristic in a general market that it's in a confirmed uptrend. We'll wrap it there, and I'll see you guys in the next video.